Morning traders, I'm Greg McKenna. Welcome to Markets Morning. It is Tuesday the 27th of November. Interesting night. We had a good bounce in stocks, a good bounce in oil. Bonds again didn't really do much. The US dollar fought back, so really interesting in that sense. But after the bell in New York, rumors broke that President Trump is favouring taking the tariffs to 25% and is not predisposed for glasnost at his meeting with President Xi. Now, I'd written already in my morning note this morning, based on General Motors shuttering 3 plants in North America, 2 in the US and 1 in Canada, that this may restoke the fires of President Trump's nationalism or tariff want or protectionism or whatever you want to call it. And then we saw that. So I think that's really important. Stocks rallied really hard. Futures are down now. Apple was off after the bell. A really good day's trade. But we need to see it followed through on Tuesday. If it's not followed through on Tuesday, things could weaken into week's end as we head towards that G20. If, of course, we do have another good night's trade, well then my bearishness will have been misplaced for the moment, and I'll obviously suffer that in my pocketbook. Yesterday, I decided to put some lifestyle positions on, money where the mouth is and all that kind of stuff. Sold some S&P, sold some SPYs in Australia, sold some Aussie yen, and sold some dollar yen. Most of those are actually out of the money. But these are not day trade. They're not even intra-week trade. These are kind of trades based on the fact that from a long term, I think that the S&P, when I look at the chart, not that I think, I hate that word think. People use that word think all the time. But from a long-term point of view, I think the charts head back towards 2100, 2000 for the S&P. So they're kind of medium to long-term positions. Just a bit of housekeeping before I kick on and we go straight into the charts. I want to thank everybody who filled out the survey. Clearly, a few of you are viewers of the video because there were some complaints and notices of my Collingwood Cup. This is not a Collingwood Cup. This is a Darth Vader Cup, #1 dad that the kids gave me. But thank you, everybody. If you haven't had a chance to fill it out, or I know that some viewers are subscribed through YouTube, but not necessarily through MailChimp, just ping me. I'm greg@gregmckenna.com.au. Just send me an email and I'll send you a link if you want to fill out the survey. What I'm doing there is I'm trying to get a feel for what readers and viewers want. 30% just want the newsletter. 30% want the newsletter and the video. 6% just want the video. 25% want the next higher level of insight, which is going to be offered, but will include things like this weekly chart pack, specialised videos, specialised reports, all of that kind of thing. So I'll be ready to launch. But if you haven't had a chance, please just ping me or have a look in your junk email box if you are a subscriber through MailChimp. Anyway, on to the markets. Let's go straight in. We'll look at Euro. What do we got? We had Mario Draghi last night talking pretty strongly on European growth. It was pretty positive, actually. He was attacked, kind of, in the European Parliament and asked if his policies or the ECB's policies have been disastrous. And he said, essentially, I wouldn't call 9.5 million jobs disastrous. And he's dead right. As stupid as negative rates are, as easy as it is to say we should have let things go bust and, you know, got that cathartic healing that would have happened in the US and in Europe, and there's no way Australia would have avoided it, we would have gone into a depression or something akin to a depression because we had banks that were going to go bust. You know, big US banks. I think Citibank traded under $3. You know, we had these big European banks. Deutsche Bank wouldn't be here anymore. All of these kind of things. At least one Australian bank wouldn't be here anymore. I was treasurer of a small regional bank at the time, and it was not fun. It was actually okay to be that treasurer because we were well supported by the local community, but it was not fun. So, as stupid as these rates are, the problem is Draghi should have been ending QE sooner. Yellen should have raised rates sooner, and we wouldn't be in the funk. The S&P wouldn't have got to 2850 and now be looking at a big reversal and everybody's hand-wringing because they can't do it. You know, that's been the misstep. What they did, they had to do to avoid a depression, which is much worse than what we had. Just think about Europe. You know, I know Greece effectively had a depression. I know Spain kind of did too. But anyway, enough moralising. Euro. Even though Draghi said that, even though he said QE is still going to end, we've got Euro under pressure. The US dollar fought back. And Euro does look to me like it's rolling over and wants to come back down here to 112 sort of 50.65 to retest that break to see what is going on. Of course, we talked yesterday. It's got to break 112 figure 20 to really get a move on. And we've got Rich Clarida tonight. He's probably going to be dovish. We've got Jay Powell tomorrow, who may also be, if not dovish, at least, less hawkish than he has been. So there is potential pressure on the US dollar. But if this trade war is hotting up again, I've been saying for a while that a positive resolution to the trade war is negative for the US dollar because effectively Uncle Sam takes his foot off the throat of all these other economies. But if the trade war is going to intensify, things aren't going to get better. Then the US, even though it's slowing now, is slowing at a slower rate than some of these other countries that are in real strife. So keep an eye on that. But Euro to me looks biased. While it's below, clearly in this little sense here, that high there, 114.35 is the key that it's got to stay above. And for me, 114 to 114.35. And I know that doesn't sound like a good risk reward, but that's the way that I use these moving averages. In terms of dollar yen, well, I got that one utterly wrong yesterday. I sold it completely the wrong time. And you can see it's just gone straight up. Now, as I said, my view on these are longer term, and I'm happy when I look at the weekly chart of dollar yen to be short dollar yen while it's below 114.50 to 114.75. But I could have chosen a better place to get short. When I look at that now on the dailies, well, you've got to say that, Greg, your medium-term view might be right or might be wrong. We're not sure yet. But your short-term view is completely off. So there's your support levels. 1 touch, 2 touch. Yesterday was the 3rd touch. That's now the trend line to watch. Once we get 3 touches on a trend line, that's when I start to use them. They're always tentative when there are only 2 trend lines. So now we've got support around 112.74. Now that's 75 points away from where we are. And dollar yen does have a bias higher. It's going to keep going higher unless we see a stock market funk. So if I get the stock market wrong in the short term, I'm going to get dollar yen wrong as well. Interestingly, Governor Kuroda is making I strongly believe Governor Kuroda is making noises that the Bank of Japan is going to change policy soon. Brexit, sterling going nowhere. If anything, the pressure is on the downside, not just because the euro's falling, not just because the US dollar is a little bit stronger, but because increasingly it looks like Theresa May's plan is going to be difficult. Now, I don't know where that leaves the UK. Well, I know it leaves them back at square one, which is what she's saying in terms of negotiations. And the EU has said, well, we're not going to reopen negotiations. So the chances of Britain going out backwards seem to increase. But in the European Court of Justice, I think it is, there is a court case where that court could rule that Article 50 could be rescinded. Now, if Article 50 can be rescinded, that means Britain can stay in. So there might be another option. There might be a second referendum. Oh, heck, we want to stay in. Can we stay, please? Or, if the second referendum was to reaffirm the first, then clearly hard Brexit would be coming. Because Gibraltar and fishing rights are 2 big issues, I think. Now, Aussie. The Aussie dollar has broken lower. This is the 4 hours. On the daily in the Markets Morning written piece today, I've got this little chart, but I've drilled down here so you can get a sense of it. So, pardon me, this 15 to 18 region is short-term support. Then we get down to 72. If it gets through 72, then I'm talking about 71.60. Now, the key here, as I highlighted yesterday, is that we're still inside that big up move from a week before. So a break either side, so you get up through 73.40, as ridiculous as that sounds. If Rich Claret is really dovish tonight, you can't rule that out. Or if we get down through 71.60, then that's when our next big move starts. Otherwise, we're just kind of wedged into a indecisiveness waiting for the next shoe for the US dollar to break. And it's interesting that it is the US dollar driving it. If you have a look in Markets Morning, the written piece today, you'll see I've got the Aussie versus Euro on a 30-minute basis over the last 10 days. And what you see there is you see that it's been pretty tight just over the last couple of days. Aussie's broken down from that since the trade war talk happened, but we'll keep an eye on that. So it's just, it looks a little bit weaker. If it can get back up above 72, sort of 40, 45, 55, then the top side can open up again. But while below that, my sense is it's heading lower, but it's still within a range. So it may be that you just want to play the range. In terms of the CAD, dollar CAD's over here now, isn't it? In terms of the CAD, we're still respecting a broad uptrend, and still below 113 sort of, 133, 20 odd. So back to a retest of this previous high. Again, I don't have anything on this. CAD's not one of my favourite currencies, to be honest. I kind of feel like it's an 8-hour a day trade, whereas the Aussies are as close to 24 hours as you can, and even the Kiwis, and of course the other big majors are. But that is still biased higher. It's got some decent resistance at 133.20. In terms of the Kiwi, we had trade out today, slightly worse than expected. You see a big reversal in yesterday's candle for the Kiwi. Look at the 4 hours. You can see, you can draw a little channel there. It's heading lower. You look at the dailies, it's signal the MACD going down. Now, one of the questions I got in the survey was, how do you use your MACD, blah, blah, blah. Essentially, what I'll do is I'll do a dedicated video to that, but essentially it's when the momentum stalls. And when the momentum stalls, then you get stops coming up to market, those kind of things. Then you get it rolling over. It can still be in the overall uptrend, but once you stall, you get a tradable high. And then we can move lower, and then the target becomes the 38.2% of whatever the move. And I have used on occasion. I'm not a day trader. That's where I started out life, as a day trader, back doing interest rates. But I'm not a day trader per se. And the key for me is that approach, that system I have. It still works if you take it down to 1 minute charts or 5 minute charts. The MACDs, the 30s, the 15 EMAs, those kind of things, the trend lines. People, they still seem to work, and people are still watching them. One of the more destabilizing things going forward, if we don't get a resolution, and something to watch, keep an eye on this, is the dollar yuan rate, CNH and CNY. CNH offshore is a little bit weaker at the moment. 698 is this high across there. 7 above that is the psychological level. These are not very far away in percentage terms, when you consider the kind of moves we get in oil and stocks at the moment. But we do, if we get through 7, then the medium-term call is 725. So you've got to keep an eye on that. I'll do commodities next, and then we'll move to stocks in a sec. Gold is rolling over. Two things hurt it last night: stocks up, risk appetite, and a recovery in the US dollar, but didn't do too much. It's still at 12.22, so it's not really going much. My sense is a retest down to sort of 12.05. We'll see how it goes there, and if it can hold, then well and good. I guess from a kind of a fundamental point of view, if my sense is that stocks could, on a medium-term basis, have a poor outlook, then gold has to. But the question is, do we get the Santa rally before stocks, have that medium-term outlook? Where the stock markets have been and that kind of thing reminds me very much of gold back, when it made its high up near 1900. It took months. There was a months of toing and froing before, the really big falls happened. Now, it may not take that long. It may, I'm not sure. In terms of the other precious, still in a range for silver, basically trading either side of that and not doing terribly much else. In terms of copper, under a little bit of pressure here. keep an eye on this. Obviously, iron ore is getting absolutely poleaxed. Iron ore yesterday was limit down on the Dalian exchange. The only reason, as Scuddy from Business Insider said, sorry, I keep looking at the other screen, but they've got some big wave surfing going on. As Scuddy said, the only reason it couldn't keep falling is because they shut the market. So iron ore under a bit of pressure, Chinese growth under a bit of pressure. The IFO in Germany last night was not strong, particularly in terms of the outlook. And to that extent, we are seeing a slowing in global growth. That is something certain now. Mario Draghi tried to say last night, things have started to improve, cars and all that kind of stuff. But if President Trump is going to kick off and it is a negotiating tactic. Everything he's doing is trying to change China's behavior. So, but the thing is, he's still pushing. So anyway, pardon me. If that's the case, then this range for copper, 264, 286, and within that, this parameters of this wedge seem to dominate. But copper could be under a little bit of pressure. Now, a nice bounce for crude oil. That's the daily. It's fallen so fast that a 3% bounce in Brent looks like a tiny move, but that's what it was. It was a 3% move last night. 2.74, back up at $60.40 or thereabouts. Inside day, so it tells us nothing. I know that's a weekly, but inside week, so that tells us nothing. Inside day is that one, so that tells us nothing. What have we got? Well, my sense is a test back to the low from which it broke down, which is 61.69, but also a test of the high on that bar, which is 62.76. So somewhere in that buck is where resistance lies, and if it can get through that, then it can start to look a little bit better. But if we have a think about where this is, this trend line, pick it up, come on, 64 bucks. So maybe it can get to 64 bucks, but we need to see a rebuilding of confidence in this market. As I wrote yesterday, and as I said in this screening yesterday, I think medium-term calls for me with a little bit of time look like a good bet, a safer bet than trying to catch a falling knife. And I know if you're an active trader, 3% is a great return on a day. And if instead of buying an option I had of bought physical, then I'd be 3% up, wouldn't I? But that's not the way that I approach these kind of markets. And it's interesting that the CME has increased the margin on oil contracts. Inside day, but a good day. A rally of 2 and a bit, close to 3%, I think. This should bounce sometime soon. If this was a vertical market, let just turn this upside down. What would I be saying? I'd saying it's gone too far, too fast. It's too steep. It has to come back. So to a certain extent, I feel exactly the same. But once again, using the same protocol as Brent, looking for a move back to the level from which it broke down, 52.75. Above that, I think it's 54.08. 54.08 is the high, which is roughly where this trend line comes in. So that's where resistance is going to be. 52.75, then 54.08. And then we'll see what happens. Ecuador has said today it's signed on for OPEC cuts. We expect the Saudis to say something. It just depends on what happens with President Trump, and particularly after the weekend where he tweeted against both OPEC and the Fed. Right, what do we got? Well, we've got a respect of the recent lows, the range lows at 2,600, and the medium-term view, or even the run to 2,500, can't open up unless 2,600 goes. And I know that sounds trite, but that's the reality of it. We've got a good rally yesterday, so now you have to think about, well, okay, if that fractal low holds, which is, 2,625, if that holds, then where to is the rally. And it's a question whether you want to draw it from there to there or there to there. Either way, my 15 EMA 2687 looks like it would be a reasonable bit of resistance. But if we break it down to the fours and then we go, probably should go from there to there just in the very short term. Right, 2672 was roughly the 38.2% retracement of that last move. And then above that, you've got 2,700. So 2672, then 2,700 look to me to be the big levels to watch. And then, of course, you've got 2730, 2740, that kind of thing. back up where these levels 27.50. So that's the setup for the S&P. Now, in terms of the Australian market, we're having a down inside day so far, but it's only just early. We had an awful market yesterday. I think we opened at 57.16. We fell. Then we bounced back to 57 flat. Then we sold off, finished in the 70s, maybe even the high 60s. And then now we've rallied quite nicely overnight on the back of the US. That just tells you this market needs to take its lead. This trend line's a reasonably good one. Pardon me. It really does depend on what the US does. Today, though, it's probably going to be under a little bit of pressure, depending on what Asia does. And certainly Chinese markets may react. The Chinese yuan may react. That would hurt the Aussie. I'll just quickly do the DAX, and then I'll get my skates on. Nice bounce, very nice bounce. 30 EMA for me will be resistance. That's 11,445. From a trading point of view, you have a double bottom here. So the right sized position, depending on your risk, could take a position for a rally. It's not my favorite option, but my job here is to discuss possibilities. And so if it got up and through, say, call it 11.5, you might get a run. But remember, 11.7's been tough. 11.700, 11.750's been tough for the DAX to break. But 11,000 is holding quite nicely. So it could be that we are building for an increase, but it's not my favorite. So this is the MT4 version of Bitcoin, still under pressure. Got back above 4,000 at one point last night, but still struggling. If you break through 3,400, then that long-term target I've talked about for 3,000 comes into frame. All that kind of stuff. Anyway, Rich Clarida is the big issue tonight. Watch out for what Rich says. That's at 12:30 my time, which is 8:30 in the morning in New York or Washington, which is then 5 hours further on in 2:30 in 1:30 in London and that sort of thing. So anyway, that's it from me. So have a great day. I'll be back tomorrow. Thanks everyone who filled out the survey. I really appreciate it. Give me really good feedback on how to structure the offer. There were questions of why I'm going to a subscription service, all that kind of stuff, because this is my job. Currently, I don't get paid. I'd like to get paid. Got to pay the school fees. Otherwise, I'll go to a bank, get a job there. I'll catch you tomorrow. Bye for now.